And we are live as people are tuning in. Sorry about the delay there. We have had technical difficulties that we still have not figured out. Facebook and TriCaster.
Hello, everyone.
They don't get together well.
I'm sure most people are glued to the Cohen situation, not us, but that's okay. We were watching it too.
Yeah, you picked me up and we both had our own earphones and didn't talk the whole way in because we were listening to that. It's an interesting situation. And for people wondering, why are you talking about Cohen on an investment site? Well, because it's directly linked to the president, and that's, if you haven't noticed, it affects markets sometimes. Mm-hmm. So no actual, well, there's lots of opinions actually that I have, but it's interesting. What do you think of the whole matter as it's starting to come to light officially now? Yeah,
you know what, unfortunately, this is human behavior, just flawed humans. It's just embarrassing, to be honest.
I think it is. It's very embarrassing. It's going to have implications on the market one way or another. We're going to wait to see how people respond to that. But it's a shame because, you know, he's a liar. It's been proved that way. Even though in his statement, he literally said, I lie, but I'm not a liar. I don't know how that works. But I would not be surprised if a lot of what he is saying is not a lie. So there's a lot of stuff there. You know, it's hard. Whoever's running that case, I mean, that's not an easy case. And I'm not a lawyer, so I do not know more on that. But that will, that's going to affect the markets a little bit.
It could, yeah. Oil jumped today. That's affecting the market.
Yeah, I think that's fantastic.
Yeah.
Personally, I got a couple stocks in renewable energy myself.
What do you got?
One that's recently started hitting some of these, some of the chat rooms. I started looking into it a little bit more. Was Wilton Resources, WIL. I started seeing it in the chat rooms, and there was a news release that came out of Steve Irwin. Not Steve Irwin. Rest in peace, Steve Irwin. Something else, Irwin. I do it every time.
It's all right. It's all right.
What's his name? Something. Warren Irwin. Warren Irwin. When they were going,
fund picked up some.
Yeah, they were going into the private placement. I'm like, okay, that's pretty interesting. So I've got my eye on that one there, and
I got some Will earlier.
Yeah,
just a little bit.
When Irwin gets to something, usually there's at least something there, something to look into. So I'll scale in and out depending on how that progresses. But I like seeing his name attached to something.
Well, if you want to get into that one, that's basically by appointment only.
No kidding.
Not a lot of liquidity.
No, there's not a lot of liquidity.
5,500 shares today.
Is that what it is? By the way, on the show, we've got numerous people coming in on the show for today. A very interesting one is going to come up in a minute, actually, because we started late. We're going to jump right into it. It's with Jay Hutton. He's the CEO of Visibility. That is a very, very unique technology company where they're combining security and marketing in one, with AI, facial recognition, with advanced analytics. Very interesting interview. We've got Prakash Hariharan. He is the CFO of RTI. He stopped by as well, so we're going to be having an interview with him as well. And then Silas Garrison, CEO of HealthSpace Data. I love these data plays as well. They're very, very intriguing. I always thought they were a strict cannabis play. They're not. They're actually been in healthcare, in food and beverage, and in government services for a long, long time, and are now seeing that their company can be used in cannabis. So going over that as well. Well,
Brennan, I have not listened to these interviews, and I wasn't there, so I look forward to listening to them here.
Absolutely. Well, it is 1:10. It's right on the dot. Why don't we switch over to Jay Hutton and see what he's got to say about his company going public today. And we're joined here today with Jay Hutton, CEO of Visibility. My good sir, how are you today?
Good morning. Thank you for the opportunity.
Absolutely. And so this is a very intriguing company, because not only is it a very interesting background for the company itself, but today marks your official launch on the Canadian Securities Exchange and going public as well.
It's a big day. We're excited. It's the end of a long journey, but also the beginning of another new exciting chapter, for sure.
Absolutely. So why don't we dive right into this to investors? Who is Visibility, and what are the services that you provide?
So Visibility is principally a software as a service company. We don't sell software licenses. We sell software services per endpoint per month. And our principal marketplace is retail, analytics, and believe it or not, security. So there's enormous change going on in retail at the moment, principally driven by the fact that advertising spend to a large degree has gravitated to the internet for reasons that make a lot of sense. Create a couple of companies, Google and Facebook, did reasonably well in that marketplace. And the store, even though the store is an enormously valuable retail advertising outlet, it is atrophied over time. And most of the advertising that you see in store, promotion that you see in store, is analog, printed materials. And what's happening in the store right now, principally to address the siphoning off of revenue to the internet, but also to address the new experience that's required in retail, a more engaged digital experience. We call it the digital transformation of retail, and it's underway right now. It is a revolution, and we're at the very beginning of that. So Visibility delivers software solutions that empower visual display and interactive display in retail, but also to the use of artificial intelligence, computer learning, and machine vision. We can analyze what's happening in real time in the shopper aisle. So we can tell a brand, Nestle, Coca-Cola, various brands that we all know, household names, we can tell them how many males, how many females, what age ranges, what dwell time, if they've touched the screen, where they've touched the screen. That kind of information, only previously available on the internet, is now available in physical spaces. So what Visibility does, among the other things that we do, we principally bring analytics and measurement to physical spaces. Analytics that only have been available on the internet in the past through cookies and other measurement techniques on the internet. We're doing all of that in physical spaces.
Yeah, and it's very intriguing as well, because you're right. When it comes to advertising, when it comes to marketing, it's always changing, has been for a long time. And I think we're in the midst of one of the biggest changes we've seen since the Internet of Things started coming into marketing, in the sense that data analytics and AI and all these different methods are all coming together now to give a product, you said, that somebody could be, put it into their store, and from that they're finding out how many people are paying attention to that product, how many people are looking at it, what everything you just said, their demographics, all that. And for a retailer, you can imagine that could be useful for them, because now they're able to further market their products in the way that specifically addresses their specific customers. I can imagine that's one of your biggest sells when bringing this to retailers as a service that they need, a software that they need.
It's interesting. You would think that the retailers would be mostly the folks driven by this innovation, when in fact it's the brands. And retailers become a conduit for the brands. Retailers have a different perspective. It doesn't mean they dismiss technology. They don't. They embrace it. But here's how they view it. For 30 years, if I'm a brand new brand new beverage of some kind, I'm buying shelf space in a retailer. It's called slotting. Now, with the emergence of digital capabilities in retail, it's now called digital slotting. And so the brands will pay the retailer an annual, monthly, quarterly amount to occupy space in retail to promote their product. So the retailers, well, they're embracing the technology, no doubt, are principally seeing this as a different revenue stream, an augmented revenue stream that the brands will pay for, because of course the brands are interested in delivering the right message at the right time to the right person, but also measuring the entire experience. The brands get big data. The retailers, well, they get it. They don't necessarily see value in it right now, other than its possibility of creating a brand new revenue stream. You know what I mean?
Yeah, it's actually a very interesting way of putting it, because at the end of the day, when you've got real estate in, say, a grocery store, we always use grocery stores or a retail store when you're speaking of real estate, there's only so much space that you can use. Like, you're not going to put an ad on the ceiling. It's too far away. But now you're having, say, a pop machine, but that pop machine is real estate for a product, yet that pop machine on the front of it is also real estate for added advertising. So you're double, tripling, quadrupling what you can market to people per square footage. I never really thought of it until you said it in the way you just did, that brands will be using that in that way. I have a marketing background. I find this stuff very fascinating. So it's interesting, because now you are increasing the per revenue that a retail can have per square foot.
It's funny. We're interesting as human beings. We still function even though it's sometimes difficult to accept, we still function with a reptile brain. And the reptile brain looks at movement. So if I can create an experience in store where movement catches your eye, even if it catches your eye for a couple of seconds, I can now deliver a message to you. I can measure you, what age you are, what gender you are, and now I can deliver a message to you in real time in retail. And that is very valuable to a brand. More valuable, I would argue, than an internet experience, because in a store, you're in a place where you can act immediately on the message delivered to you. I can then buy the product and leave with the product. Internet can do that as well, but there's a fulfillment lag, if you know what I mean.
No, absolutely. So going into one of the things that you just launched last month, actually, it was the Edge software utilizing your Intel's OpenVINO platform. What are the benefits of this Edge software, and how is that going to be one of your core aspects of your company moving forward?
So the supermarket and grocery is a challenging environment in many ways. Among the challenges in that environment is getting reliable internet access. You've got compressors in the frozen foods aisle. You've got electronic interference. You've got unreliable Wi-Fi because people come on and they log on to it and it gets congested. So if you were to develop a solution that had a complete dependency on the internet, like any IoT application would, you would suffer the consequences of having shady internet, up and down. It's strong sometimes, it's weak sometimes. So our current version, our previous version of the product had a cloud dependency. The mechanical algorithms, or the math, ran in the cloud. The assessment was done in the cloud. So if it sees me, it takes my demographic data, runs it up to the cloud, and in the cloud, an analysis is done and results are driven to the endpoint. This is a 48-year-old male. He's happy, unhappy, whatever that assessment is. All of that work is done in racks of computers that sit in the cloud. Now we've moved all of that capacity, all of that math, all of that computational support to the edge. We've now eliminated our internet dependency. We now can go places we couldn't previously go. We now have a more robust delivery mechanism. And oh, by the way, we don't have the significant rack and power and costs of the cloud. We now do all of that on a compute platform that sits on the edge. Enormous value in terms of efficacy, precision, and speed, but also significantly better in terms of cost of goods, which inspires me as the CEO, of course.
Yeah, absolutely. That is very interesting, because as much as we're talking about going on the cloud can get very expensive at times, especially when you're doing, incredible amounts of data. That is not cheap. That is not easy at times. Right. When marketing your product, I believe that you were marketing already in Canada and the United States, and also looking for it abroad. What's the reception been from various either retailers or companies to your product, and how does that vary from country to country, if it does?
We often think maybe arrogantly that North America is the most advanced market in the world, but in many cases that's simply not true. Technology is adopted at different paces in different locations. We have a 2-year relationship with our Mexican partner, and they're moving at a speed that outstrips us, no doubt about it. In Europe, the whole idea of digital transformation in retail is probably 6 or 8 months ahead of North America. North America has significant barriers to change, legacy infrastructure, legacy thinking to a large degree. So these markets, they operate at a different pace. That's certainly true in retail, and it's absolutely true in security, where obviously the threat profile in Mexico is different than it would be in the USA, is different than it is in France and Italy and South Africa. So we've got significant exposure to international markets. We've done it, I believe, in an intelligent way, where we've made our technology available to local partners. Their resources are used to help us take advantage of the local marketplace. We're supporting remotely. And so for that reason, it means I don't have to scale my organization domestically in order to support international growth. They'll do that. And as part of our criteria for looking for partners, we look for partners that have that local presence. So the answer to the question is the markets, they're behaving in different ways and really maturing at different paces.
Yeah, absolutely, and thank you for clarifying that. And also, one aspect that I'd like to cover before we dive into your actual stock, and obviously today's a huge day. It's gone public. But when speaking about, we spoke a lot about marketing and about finding different areas or different segments and knowing your customers and all these different things that a retailer or a brand would find useful. But there's also another component to this, and that is the security component. Are you able to explain that really quickly, as this is a dual, a dual system?
Yeah, first of all, the derivation or the origin of the idea came from one of our retail partners, actually, one of our first proofs of concept in the eastern seaboard of the U.S. They said to us, well, we're delighted with the information we're getting from the platform. It tells us all the things we need to know about in real time about what's happening in aisle. But we have a unique problem. And the problem is, every Friday, the same group of people come in and they steal things. So, and our current protocol is the security people go up and they take a picture of them with their iPhones, and we now print it out, and all the security people have these pictures on clipboards. Wouldn't it be great if your technology could be used to proactively find these people when they're seen in front of a digital placement or a digital sign? And it made a lot of sense to us. So we then built a database which would allow for the enrollment of photos, and then in addition to all the other things the software is doing, it's using a facial recognition algorithm to say, to match this person to this identity. Now, these are already people that have shown to be misbehaviors. They've already been banned from the store. They've stolen product from the store. So we're looking to match their identity with a database entry. And when we find that match, we alert security. This is the whole idea of software analytics or video analytics, is to remove from the human being that which human beings are not good at, which is a comparison of one to many. I can't do accurate comparisons of one person to a database entry of 5,000 people. The machines can do that. Computers can do that. Or at least they now can with computer vision and all the recent advancements in artificial intelligence. They're better at it than we are. So if a machine says to us, I have an 89% probability that that's Jay Hutton, then an operator can confirm that after having received the alert and can act on that information. This is where the security idea came. And now, of course, we've extended that capability into multiple markets, and we're now looking for one of the things that we're very good at, which is one to many, the ability to scan crowds looking for specific individuals that are enrolled in a database. So that's how we talk about the marketing, the nexus of marketing security. We're combining a marketing efficacy with a security utility. Mm-hmm. And that's incredibly valuable and part of what we do as part of our mission.
Absolutely, and yeah, I can see a lot of different, especially in public areas. It's very unfortunate, but all across the world, we keep having these issues happen, of whether it be a shooter or anything that is obviously a tragedy to happen. If you've got a system that can find that person, hopefully before that actually happens, you can never say for sure, but you can imagine that that's at least going to give authorities that extra bit of time to hopefully get to that person before something happens. So it is very, very interesting combining the two.
And that's exactly what they say to us. They say, just give us a minute, just give us 30 seconds, and we can prepare and conduct a tactical response that is commensurate with the threat. As an added item, something I should have mentioned before, we've now added object recognition to our capabilities. It's a machine learning model, just to get geeky for a moment. It's a machine learning model that sits on the edge, and it looks for weapons. So we can look for 17 different classifiers of weapons, and we can alert security personnel to the presence of a weapon, in addition to all the other things it does. So we are really providing a safety utility for places that are desperately in need of it.
Absolutely, and we've just got about a couple minutes left here for our time. But I wanted to make sure that we touch base on the stock itself. It's gone public. What is the outstanding shares on the stock? And if you don't mind, were there several raises happening before you actually went public? I can imagine, yes.
Well, we raised about $6 million in a combination of debt that was converted and stock raised in conjunction with the IPO. We're about 74 million basic outstanding. I guess our market cap, as we intend to go public, will probably go public around the same price that we expected, that we closed our last round, which is 30 cents a share. So look for us to be a $22 million Canadian market cap. That's exciting for us because it shows growth, and we think that's only the beginning.
Absolutely, and I appreciate it very much. And for those who are looking to find out more about your company, it's trading on the CSE as VSBY. And I can only imagine your website as well, if you don't mind, for investors to be able to turn to look into a little bit more.
Right, it's the word visibility without any vowels. VSBLTY.net. And all of the information with respect to the public company aspects are there, as well as our product portfolio.
Absolutely. Well, I appreciate very much for you coming on the show. Look forward to seeing this throughout the next couple of weeks as the trading starts going, and seeing what different developments you have coming along as well. We look forward to having you on the show in the near future to let us know how everything's been going over your first few months of being public.
Great.
And thank you very much for that, Jay. Fantastic interview and very, very intriguing company.
Super interesting company. Great interview, by the way. What's it trading at?
So it went today. It opened at 70, which was the high. It's about 52 cents right now. It's 900,000 shares have traded hands, and the low was 49. So we had a little bit of a bounce from the bottom there. But yeah, just started trading today. Just started on the CSE. I find it very intriguing. It's one of those, it's almost like a Minority Report, in the sense that these new systems that are coming into play will be able to pick people out of a crowd for security reasons, while also advertise to people in a way that advertisers haven't had that capability as of yet. I think this type of technology is just as groundbreaking and changing, just as if when the Internet of Things came into marketing. It's very, very interesting. I think there's a lot of people who will either be very for this, but also look at it and have questions about privacy and things like that. So there's a that we got to make sure these companies do it in a ethical way as well. But very, very intriguing.
Right, but aren't people enabling these types of functions on their phones through privacy settings?
Oh yeah, right now Facebook just heard me say that, and it's already trying to get some advertisements in here to let me know that actually no, Facebook is amazing. Facebook is the best. Facebook is love you, Mark.
No, but like facial recognition and all that, right? So it's kind of where we're headed.
Yeah, I do not put that facial recognition on my phone. I only do thumbprint. Joke's on me. They still know exactly who I am.
Until they take that away, and then you have to actually do it.
Yeah, no, exactly. So we're actually going to be jumping right into our next interview, though, because we started a few minutes late due to some technical issues from earlier. So we're going to go into Prakash Hariharan. He is the CFO of Radiant Technologies, another, I shouldn't say another company. They were one of the first extraction companies, first in my mind, that I started looking to on the stock market. They've been out of the story for a while as they're building, waiting for license things be. Lots of news this month, and is it the time of extractions? Pretty much. Look at Valids, look at labs, look at these people start going. So RTI, going over to Prakash right now, and what he had to say. We're joined here today with Prakash Hariharan, CFO and Director of Radiant Technologies, as well as CEO of Ali. How are you doing today?
Great, thanks for having me here.
Absolutely, and thank you for coming on. It's been a busy month of February for Radiant Technologies. What have you been up to?
Well, I mean, the biggest catalyst for the company was our grant of the processor's license, which was in its way. It was pushed back by a few months because of the changes in the regulations that happened mid-October, and they needed to go through a bunch of other regulatory steps, which typically they didn't have earlier on. So we had that massive boost to our capabilities in the company to start processing, biomass, especially the cannabis plant, to get the extracts. So that was a big step for the company. And we've also kind of been advancing our engineering runs in our plant, engineering batch runs. So we're in a position right now to get material out particularly for our partners, Aurora Cannabis, that owns a significant chunk of our company, and they are our biggest partners on the extraction side.
Yeah, absolutely. And I followed your company for quite some time, actually. We were speaking earlier when we saw that 15 cent to 30 cent jump about 2.5 years ago or so, where you really jumped on the scene. Everyone's like, well, what are they doing? And that's when people started realizing you're doing your MAP technology, your microwave technology, which is very, very different from other extractors out there. Can you explain the difference and the significance of why that's the choice that you guys have taken when coming to extraction?
Well, Radiant has been a specialist in the MAP technology area. When I got involved in the company, it's founded by Dr. Steven Splinter, who's among the best brains in the space. And he has an entire dedicated team that has been working on microwave-based processes for extracts, not just on cannabis, but also, for instance, we've had success on the nicotine side with tobacco companies. We've had a bunch of products that we worked on the nutraceutical side. So MAP has been around for Radiant. And we felt that we made the pivot into the cannabis space sometime, I think, in the middle of 2016, early 2017. That's when the spike happened, because capital markets started recognizing these industries. And MAP effectively is a more industrial scale process for extraction. You have conventional extraction processes where you use ethanol-based, solvent-based, supercritical carbon dioxide, which is the most conventional extraction methods that the current cannabis producers have been using. So MAP was a bit of an outlier to kind of say, can we use MAP-based industrial scale process for extraction in the cannabis industry, which was pretty much a cottage industry for a long time. But things really, really changed in the last year and a half. We had our partners Aurora, who saw the efficacies of the system, setting up 100 metric ton greenhouse in Edmonton. That's the Sky facility, and then they're going ahead and doubling that at Sun. So all of a sudden you have 100 metric tons of flower. And the demand now is more for the oils and the downstream processes, the downstream extracts of cannabis, CBD-based products, which require an industrial scale process now.
Absolutely.
And that's the game changer. That's a disruptive element of this company. So you're looking at the companies that are effectively having that step change in disrupting the methods of extraction. So Radiant will be one of those many companies that would basically be very interesting for all the growers and cultivators to look at, how this technology, how this process can give me industrial scale product with consistency, purity, and yield.
Yeah, and it's almost like we've entered another phase. I've been, as you track cannabis investing over the last 4 or 5 years, especially in the States and coming to Canada as well, it's been interesting, all the different phases. We're all like, where everyone's looking at who's going to produce the most, and you're looking at people who's going to be the exporters, who are going to be the MSOs if you're in the United States. It's almost like this last month or so specifically, we've really seen a push in extraction companies, because people are saying, wait a second, these guys put up a lot of revenue very quickly, and all these LPs, although they may have ability to extract, I don't think many of them have really set themselves up for mass scale.
They are different. It's a bit like the oil and gas business, right? I mean, for Canadian investors or any conventional investors, you had the E&P companies that used to effectively get the oil from the ground, and they would basically explore. And then you had the services companies that would effectively have the equipment, the technology to extract it from the ground in economies, the netbacks, and getting the ROEs and getting the enterprise value per flowing barrel, the metric that people typically use in oil and gas companies. So that's a separate industry altogether.
Exactly.
So you can have a Suncor and Halliburton as the same company. So you're going to see that kind of evolution move into the services business, which the extraction companies and the downstream companies, then you'll have the retailers as well, who would be affiliated to these downstream companies, will put the products on the shelf. So you're going to have the complete value chain that's going to be created, from the people who can grow the plant to the companies that could have the sophistication, the capability, the operating team to extract the oils from the plant. So that will be a definite evolution. Even if you look at, a good parallel is like, the tobacco industry. You have the tobacco companies typically have never really gone. They've always been, taking tobacco, making the powder form of tobacco and in cigarettes, or in now, of course, the vaping companies. Now suddenly the shift has come to the vaping devices. They're really, so, you've seen the different paradigm shift there, and we are seeing that in the cannabis space very early, because people recognize the fact that extracts are going to be a little bit more valuable than effectively just growing the plants, so they see that the investors are trying to make that difference.
Absolutely. And when it comes to Radiant, what type of capacities are you aiming to have this year, next year, in the future? What's going to be your footprint?
Well, we just got our license, so we got started, and we have basically a three-phased project. The first phase is effectively our existing plant, which we had to change into a cannabis processing plant. So whatever we were doing in the existing plant, we had to put that out and then reorganize this into a cannabis facility, which is GMP and has the securities licenses and the processor's license. So we start with about, in the existing plant, with about, 250 kilograms per day of flour. Then we have Edmonton 2, we call it, which is exclusively for hemp, CBD from hemp. And then we have the big expansion footprint that will probably be operational middle of next year, or maybe earlier than that, depending, which will be the massive footprint for over 1,000 kilograms per day of dry powder flour, and going more downstream to that there. So that all in all, this could be a massive footprint, over 300,000 kilograms per year, the way people kind of put your capacity plans in play. But bottom line, it's, we still have our partner that's doing about 100 tons per year of flour, and adding on another 150 tons, and then there's also the CBD from hemp side. So between all this, I really don't see any reason why, whatever we're doing is still be less than what the demand is going to be for the downstream products. So.
Absolutely. And speaking of that expansion, I know that last summer you had a private placement, and there were the funds from that. Is that where these funds have been allocated for, is really the expansion, or is it part of it into research and development, or where has that gone to? Well,
a bulk of it, basically, I would call it, has been to roll out the whole Edmonton 1, 2, and 3. So even when we look at the capital outlay for Edmonton 1, 2, and 3, it's basically the capacity has been spoken for to just offset the demand that's been extremely strong. And then we are also having a footprint in Europe that we're looking to build. I think Europe will be a very big market. We've had a lot of demand for extraction facilities there. So we've just started the process in Europe. So the capital outlay, in a sense, has been allocated to these 2 or 3 projects, and the main one, the bulk of it, would be for Edmonton 3, that we call it, which is 1,000 kilograms a day of cannabis, to get the cannabis oil extracts from there.
Very nice. And we spoke a lot about extracts of cannabis, but I believe that's not what you're only doing. It's obviously a huge part of your business plan, but you're also working with food products as well. What areas are you going in?
The cannabis part is one, and there's of course the CBD from hemp. That actually requires an industrial scale process, to get the. I mean, if CBD, just given the paradigm shift of CBD in the United States, and what we expect may be happening in Europe or anywhere else in the world, the medicinal usage of CBD from hemp. So a company that can effectively give you economies of scale on extraction of CBD from hemp will be a very, very important player in this space. Yeah. So that is, of course, another important and significant milestone for Radiant as a company, to prove our technology in that area, which we are in the process of doing right now. Yeah. On the food side and the nutraceutical side, that's been our whole, typical traditional business, which we have put that aside to basically just cater to this demand that's come out of on the cannabis side. But we've been doing a bunch on antioxidants, carnosic acid, for different biomasses, and we actually have a joint venture in Spain. We made a small investment there, and we also have a facility called Processium in Europe that will be dedicated to all the non-cannabis side of the business.
Very interesting, very interesting. Well, I can imagine as well, though, given how rapidly this sector is expanding, that you are not going to have a shortage of cannabis extracts that people are demanding from you. So it's going to be very interesting.
It's the level, as you just mentioned, the investment community has kind of woken up to this whole vertical. I mean, there are 2 or 3 other companies who are being kind of in the news in terms of their partnerships, etc.
Yeah.
We were among the earlier ones to have this partnership with Aurora. We had to wait to get our processor's license, so now that we've got that, we're on an execution mode right now. But the industry has kind of been watching this space very closely, and it's been fortunate to have a partner like Aurora, who is among the biggest growers. I mean, they bought a whole bunch of companies in the last few years, so their annual throughput of plant is over 750,000 kilograms in a year. So, and all this is material for an extraction company to kind of build processing facilities, and this doesn't even include hemp.
Yeah.
So, so that becomes very interesting for Radiant to have a team roll out the platform, roll out the technology, and scale up from where we were to process these quantities of products.
Absolutely, and I know that your quarterly, or I believe your quarterly financials are to be released soon. Are those coming out in the next couple of weeks, or is that coming out?
Yeah, it should be. I mean, we are following the regular schedule for quarterly numbers, so I mean, it should be whenever it's due, I guess, in the next week or so. So. Absolutely.
And then from an investor standpoint, when looking at your company, if you were to look at an investor, which you are looking at hundreds or thousands of them right now, if they were to ask the simple question of, as a shareholder, how are we going to be increasing shareholder value, and what can I be excited for in the year 2019, what would your answer be to them?
This company will basically be having the massive step change in 2019. I mean, we are having a certain market cap, roughly about 270 million. I mean, we are, from a revenue standpoint of view, we are basically need to still execute and demonstrate the revenue profile, but simply because we had to wait for a license before we could do that. The important thing is the valuation of all these extraction companies is a fraction of the valuation of all the growers and the cultivators, and there will be a catch up there. I really think that it's like the services business, right? In the oil and gas space, you can't have this massive discount between the cultivators and the extraction companies. So the minute the extraction companies start posting quarterly numbers, profits, the investors will wake up to the profitability angle of these extraction businesses with a low capex and low overheads and less hands handling it. So it's like your cloud services for Amazon or something like that. So so that would be the massive change, and I really think there'll be a massive value in asset value creation for almost all the extraction companies this year. I mean, they're extremely undervalued now compared to the growers, and Radiant is one such company. Yeah,
and I've said it for a long time. I mean, do you invest in the wheat that's being grown, or do you invest in the beer company making the beer at the end of the day?
Or like the tomato growers or the ketchup manufacturers.
Exactly,
right? So,
that's probably a better example, because you're not going to go in the actual product, although cannabis is a little bit different, because people obviously smoke cannabis still, and all to them if that's their thing, but I think the actual processing is where people, because you can grow a nice plant in your backyard. Who's going to go set up an extraction facility in their backyard?
Yeah, but the quality of the extracts, the quality standards that you want, the consistency you want for CBD percentages. I mean, someone says it's a 25%, 80%, or 95% pure product, and you need to have those consistencies in the product on the shelves. So I'm still kind of extremely excited about how the CBD from hemp and the medicinal side is going to look like in the next 4 or 5 years. If you're going to go and walk into Shoppers Drug Mart and see branded products with for pain relief or for sleep deprivation or for pain management, so if you're going to see those things in your pharmacy, and how are these standards and the quality is going to be maintained, and who is going to give those? I mean, this is going to be a very critical part for the industry participants, because we are still in the beginning, of as they say, we're in the first half of the first inning, you know. So
yeah, I believe in that too. I believe in that too.
Yeah.
Well, I appreciate very much for you coming on the show and giving us a little bit more information about the company and some updates. It sounds like as these months go on, there's going to be even more updates as we continue moving into this new sector, as hemp starts coming into play.
Exactly.
All these other products. So we're really excited to have you back on the show in the near future. We can go over the developments that have happened over that time.
Yeah, thank you.
Well, thank you very much for coming on.
Thanks.
Appreciate it. And thank you very much, Prakash, for coming on and talking about your company.
Another fabulous interview, Brandon.
Cheers, cheers, cheers. It's all the interviewee. That's all it is. It's all the interviewee. But no, it's nice. I remember, as I said in the interview, I remember that stock very, very clearly when it went from 15 cents to 30 cents.
Yeah, I remember actually a buddy of mine, Thomas, bought the Interradiant the day of that news release, and it was put on my radar. I remember looking at it.
I didn't say it in the interview, but I was speaking to him personally, and I remember saying to myself, it's overvalued. When it went to 15 to 30, 15 cents to 30 cents, but then went to $2. So clearly,
it took a while.
I was wrong.
It took a while though. I think a buddy of mine did well on it.
Yeah.
And but yeah, it was that was like, was that 2 or 3 years ago?
2.5 years ago now. Yeah, I remember that very clear. So I like to see them back. They had a really good month of February. 17 new patents were released in one of their news release. That they're licensed in another news release, and then I believe they were shifting around some board of directors in another news release. But they've got some news coming up, and they're going now, and it's the time of the extractors.
Well, the LPs
that's a little bit of a thing right now.
Yeah, Aurora knows what's going on. That's why they invested in them, right? A long time ago.
Yeah, they have some smart people over there. What percentage they own of them? I don't know. People in our chat rooms, if you know the exact percentage of...
or they have an option.
Yeah, of what Aurora owes over RTI. If you could put that in the chat, that'd be fantastic, because I don't know off the top of my head. I do not.
Let's chat about it.
Let's chat. Well, going right into another interview, we had a packed day today, because we had some great guests coming on, and we still have Johnny Mack coming on as well, so we're going to jump right into this. We were speaking with Silas Garrison. He's the CEO of House-Based Data, and as I said earlier at the top of this show, it was very interesting because I always thought that was a strict cannabis play. Seeing some news coming out, but no, they've been in this space in data collection and helping governments and restaurants and all that type of things move into the new age of things, moving into having everything on documents, everything online, opposed to just paper. They've been doing that for a long time. So I had a great interview with him as well. I think he had a lot of information about his company that's packed in there. You'll hear about that right now. And we're joined today on the line with Silas Garrison, CEO of HealthSpace. How are you doing today, my good sir?
Doing well, Brandon. How about yourself?
I'm doing very well, and I appreciate you taking the time to go through some questions, but also just let investors and viewers know a little bit more about your company.
Absolutely. I appreciate you taking the time to do this.
Perfect. So why don't we jump right into this? For viewers who may not have never heard of you or have heard of you, but needing a little bit of a reminder, who is HealthSpace and what is it that you do?
So HealthSpace is a software provider to state and local governments. That's kind of like the 30,000-foot view. Really what we do is we have innovative cloud solutions that help government operate more efficiently. And in doing so, we also have new products that we're launching to help the private industry keep up with compliance and then themselves operate more efficiently on a compliance and regulatory basis.
Absolutely. So essentially, you're trying to help bridge that gap of miscommunication, or just everything these days, especially with government relations, is so paper-based, and unfortunately when you make changes, that's very hard to keep on top of. I believe your new platform, it was myhealthdepartment.com, is looking to help bridge that gap of confusion and help them communicate better. Can you explain that program and how that will help these different enterprises?
Absolutely. So, government agencies collect a vast amount of information on private industry, and the software that we provide to government allows them from everything in the back office out into the field staff. So think about a restaurant. So a lot of health departments utilize our software to go in and inspect a restaurant, but that's just one piece of the puzzle. They also issue licenses, they issue citations, fines, and fees. And part of this platform will do is shore up all of that information into one funnel. So as a business owner, especially if you are a multi-location business owner, say you own 5 franchises across a state, you can access all this information in one place. when you have to file a renewed application or renew your license, you can do it all digitally. It communicates right back to the health department and the governing agency. And then you can also, what's really actually very important in part of this is actually pay for all of your licensing fees online. Right now, everything in a state and local basis, probably about 95%, comes via paper check or physical cash. And so all of this will basically bring private businesses being able to interact with government into the 21st century.
Yeah, very interesting, and that's needed as well, especially with the fact of payment, all just having it all in one place. I mean, I've worked for many different businesses myself that were making that jump into the new age where they started saying, "Oh, what's a Google Sheet?" And we're switching from paper over it. But it's amazing how much more you can stay connected. But also, if a change happens, anybody who's linked to a system that is in the cloud and always changing, they'll always know what the current regulation is today, at this hour, this minute, and this second, which is obviously needed in a lot of these industries.
Absolutely. There's a lot of, legalese that goes into keeping up with government compliance. When we digitize governmental codes into our software platform, I mean, these things, if you take them into like a Word document, they're hundreds of pages long. So it's impossible for a business owner to really understand and break it all down. So what we're going to do is part of the platform, which is to break it down into kind of human readable, just common language, so that they understand what the actual purpose and meaning is behind a regulation and how to keep up with it.
Perfect. And you're speaking a little bit about the food and beverage industry. What industries is HealthSpace currently in, and which ones are you looking to further focus in as well?
Primarily and most focused, we are on a government. So we offer our solutions to over 300 government agencies, are actually live deployed with our software across North America. We are actually the largest independent provider of public health software across North America. And so we are dominantly focused on providing this software to government agencies and making sure that they're operating more efficiently. And in turn, what it does is it creates a unique relationship we can stand up with private industry. Food and beverage is one, but the public health departments actually cover everything from daycares, schools, to tattoo parlors. And the list goes on and on and on. And so the point is that there's a lot of private industry that is affected by the information our software collects. And so now we're standing up a platform to give them immediate access to that, and not just access, because this information is only partly valuable. Actionable information is very valuable. So allowing them to proactively act on the information that they're seeing, whether it's a violation that they need to get corrected or whether it's paying a licensing fee that they need to pay to stay in business, we are going to digitize all that information, make it immediate, real time, and transfer all of the information back to the government agencies. So we shore up a lot of industries and a lot of pain points that come with dealing with government processes inside of these industries and underneath the public health departments primarily.
Yeah, and I appreciate you cleaning that up as well, because I think a misconception out there by some of the investors, especially newer investors who stick, primarily in the cannabis space, have a belief that you are almost strictly in that space, and that comes with risks for a lot of these different agencies or companies that want to penetrate the cannabis space when they're only trying to penetrate the cannabis space. But this is actually a story of someone who's been in the system and in data for a long time in government relations already, who then looks over at the cannabis space as well and says, you know what, they're going to have a need for this as well. I'd like to move into that space as well. So it's interesting to hear that you are already in many other sectors, but along the same lines, when it comes to cannabis, how is that entry level into that space going, and what are the the roadblocks that are still there when it comes to it still being illegal federally in the United States?
Absolutely. Being that we are a North American-based company, and the largest set of our clients are actually U.S.-based, so we offer, we have state agencies in Tennessee all the way out to the West Coast in Oregon. And so being that we operate in the U.S. very heavily, we have to be cognizant of the fact that it is federally illegal. Cannabis is a very hot space, and then we've done a lot of legwork and built out a lot of relationships on the private industry side. But really what it comes down to is timing. There is just a dearth in terms of efforts and offerings for compliance and regulation upkeep within the cannabis space. But when it comes down time to try to offer a solution or make a sale, a lot of the cannabis growers and distributors, especially the larger ones, are not as concerned with, the regulatory compliance because it's not really been put into place. If you look at the food and beverage industry, there is just a laundry list of codes and regulations and standards that you have to follow. There's a lot of knowledge and information that goes out there to follow these regulations. On the cannabis side, it's very light. There's not a heavy amount of information that, in terms of regulation, that you have to follow, and further, it's not consistent. There's no federal standard, and so, especially in the U.S. So, given that that's the case, we are slowly working on our relationships within the cannabis space so that when the regulatory environment opens up and, in the near future becomes federally legal, there will be a lot of compliance and upkeep that our software will be the perfect match to meet and help these agencies actually keep up with the ever-changing regulatory compliance that will be heavily levied on the cannabis space.
Yeah, and then there's still a lot to come. I know Health Canada, on our side of the border here, they've got a lot of things in place, but they keep changing it every single day. But they are much ahead of the United States on a federal level, and they still don't really have all those answers as well. So that's coming to fruition and coming into place slowly and surely, as you said. Now, speaking of yourself as a company that works throughout North America, do you have any aims, or are you currently abroad and looking to have a larger presence abroad?
The short answer is no, and the reason behind it is pretty simple. In the U.S. alone, the state and local agencies in the U.S. spend over $100 billion a year U.S. on IT services, that's software and everything else. A larger and larger portion of that IT spend, that $100 billion, is going to cloud solutions, software applications like ours. If you just comprise public health, which is only one segment of state and local government, you're talking about tens of millions of dollars that is capturable market in the very near term for us. When you expand out, and the fact that we also sell to departments of agriculture, we're now talking about another hundreds of millions of dollars that we can actually establish as a real sales pipeline. So are we looking outside of North America? No, simply put, because there's just too much to grab here.
And fair enough answer as well. And speaking of having contracts with different governments and what have you, I know investors are keeping a very close eye on your statewide contract with Florida. Do you have any type of update on that, of when that could come to fruition, or is there still a little bit more to go before that comes to fruition?
So it is still in the works. There is no signs or even hints that it is going awry. In fact, we just had a call with the state last week saying we are extremely excited to get this going. Where it really stands from a contractual standpoint is that they're working through it with their internal legal department, and those things just take time. This is an application that, once fully deployed, will service like 1,500 governmental employees. So you're talking about uprooting the day-to-day lives of 1,500 government employees within the agency that have to use this on a day-to-day basis. So they're just taking their time to ensure the process and the legalese within the contract is to their liking. And so you effectively have the department that's purchasing it, and then you have legal, which resides over contracting, and they're making sure that the department is shoring up all the details and crossing all their I's or dotting all their I's and crossing all their T's.
Absolutely. So essentially you're saying governments work slowly. Unfortunately for all of us, we know that to be very true.
But the beauty of them working slowly is that they're sticky clients. Our revenue, once it's there, it virtually never goes away. We have basically 100% client retention over 20-year history.
Yeah, and on that note, actually, I can imagine a lot of investors are asking that as they're watching this interview right now. What is your revenue streams currently like, and how many different revenue streams, like opening up the state of Florida is a very large one. How many revenue streams do you have, and what does that look for an investor looking at your company right now and wondering where can I get share price appreciation from?
Yeah, absolutely. So first and foremost, our bread and butter is government SaaS revenue. So a software as a service model where we sell subscriptions to our product to government agencies. It's that simple. And what you're looking at now is that we've aggressively built a reputation inside of the public health market, and there's still a lot of land up for grab there. But now we're branching into other government agencies. So whereas, a public health agency, like a city in the U.S., they might pay, somewhere around 6 figures a year to purchase our product and buy a subscription to it. But then you have departments of agriculture. Departments of agriculture are larger, have more extensive budgets. And so you're looking at larger deployments there. So short answer is we're just going to continue to grow our current subscriptions to our software. Now, as that happens, so does our data footprint within these government agencies, which we can then take and become that bridge that we talked about between the private sector and the public sector. One of those things is we mentioned in a press release just a couple of weeks ago that we just signed a partnership agreement with a premier online payments provider. And part of that agreement will include a revenue share. So as payments flow from the private sector back to the government on this platform, HealthSpace will actually be able to make a monetary transaction, AKA a new revenue stream. And when you're talking about tens of millions of dollars just in our current client base without any future growth, you're talking about long-term, there is billions of dollars in governmental revenue that can flow through this pipe that we can then capitalize and grab a percentage point of revenue share on it.
Very interesting, and I appreciate that very much, going over that. I know for myself, I followed your company throughout the news releases over the last year or so, and I've learned a lot from this interview just on the various aspects you currently are already in and where you're focusing on, so I appreciate it very much. For investors looking to find a little bit more information on you, your website that they can find out and dive a bit deeper into.
Yeah, so they can just go to our website and go to the Investor Relations tab. There's all of our filings, all of our press releases are on there. And there's also an email that you can contact us via, and that flows directly to our Investor Relations team. That goes to me. And I'm happy to answer any questions for anybody. I talk to shareholders on a weekly basis who just reach out to me. And I never find myself too busy to answer any questions that, help people understand what it is they're investing in. And it's important. Someone giving you their money is the most trusted thing that they can do. And it is my duty as the CEO to ensure that I return maximum value to the shareholders. And the opportunity we have to do that is truly massive.
Absolutely, and I appreciate that very much. Thank you very much for coming on the show and taking your time to address shareholders and answer a few questions I had as well. I look forward to seeing what you have in store for 2019 and coming on the show a little further in the future and seeing what type of updates we've had in that time. And for my third thank you today, thank you, Silas, for coming on the show. I think the two CEOs and the CFO in Prakash did a very good job describing their companies there, so I appreciate that very much. Yes, and you did a great job extracting the value. I tried 97.2% of the time. The other time, I didn't have coffee yet. And you know what? I want to bring Johnny Mac in right now. Do it. Do it. And point. Point as you do it. I'm not pointing. Point to the camera as you call him in. Say, and live is Johnny Mac for another case of TA Breakdown with Johnny Mac. And live we have Johnny Mac doing some TA. How are you, Johnny? That was pretty good, folks. That was pretty good. I don't know what the point of that would be, but good afternoon. Yeah, I don't know. It's just me poking fun with Karl. No, he said point. Oh, come on. I didn't catch that. Witty as always. Yeah, that one. So I was asking Brandon, who won the poll this week for the TA breakdown?
I think it was Prevacutical was the number one pick. Interesting. Yeah. Interesting. Very nice, very nice. I went into that Facebook group and I gave him a little, I was like, hey, you should probably go here and vote for your company. Well, it worked. It worked. It did work. Well, why don't we dive in, because we've got about 27 minutes. So it was a packed day today, so why don't we dive right into that, because I think we're going to do an extra one if we have time that people will want to listen to. Oh, actually, we're having technical. Okay, we got it. We're good. I forgot to share my screen, I think, eh? Well, Possible. Things happen, Johnny. Possible. Okay. We got lots of different screens here. I love it. Investor knowledge. That's what you're about to get. Right there. Prev. Okay, are you guys able to see that?
That's
Karl, Brandon, everyone see that okay?
Beautifully. You all
all right,
man. Yep. Giver.
So this is the weekly chart on Prev. It's obviously not a pretty chart. It's very apparent when you look at this chart. The stock has had difficulty holding its lows, really like a number of companies we've covered on here. Every time it hits a new low, it's not holding it. Down. Some potential bottom fishing play here, but okay, yeah, we set a higher low from before, but look at the follow through. There was none, and then we lost that low. So I mean, it's tough to like a lot on this chart unless you're the type of investor or trader that's looking for a bottom fishing play. I know that unfortunately the Bridgemark folks allegedly were involved with this one, and I think that private placement closed around here. That was done at 5 cents, so there was probably a bunch of that paper washing through the market when we had this run back in September, and I believe that the stock ran without any disclosed news. I think it was actually near the high when the news started to actually come out, but you can see that did get sold off, even though we had two really good high volume weeks here. I mean, very high volume weeks. We had an upper wick of profit taking but got good follow through. The volume was strong, but it hasn't been able to hold its gains. It's not holding its lows. So, I mean, that's one observation right away.
Would you say that's a dead cat bounce there, Johnny?
You could possibly characterize it as that. I mean, it's... I don't know. It's hard to like the chart. I mean, it's been basically down since day one. If you bought it, most people will probably be in on a loss, right? So if I kind of zoom in, and I will sort of throw this caveat out, and you've probably heard me say this before. I don't feel real comfortable with TA on stocks that are it's not even at 5 cents. And if you look at some of the volume on these days, like it's not even 1 million shares being traded. So you're looking at, less than $50,000 trading hands every day. So there's not a lot of liquidity there, even though the stock is cheap. So you're not necessarily getting a good representation of the buying and selling and pressure in the market. So that's something to keep in mind. So I always kind of throw that caveat out when you have a really cheap stock like this. I'm not necessarily going to rely too much on my indicators. It looked like it had found, on this big push it had back in September, again, good volume. Could almost argue this was a bit of a head and shoulders. So here's your left shoulder, head, right shoulder, broke the neckline. Found some support here around 7 cents, but it wasn't able to hold, and now that area has been acting as resistance. So it's twice tested and rejected. So again, the previous areas of support where buyers are strong, when the buyers get overwhelmed and the sellers push down, you would expect the sellers to be strong there. So I mean, right now you're looking at a support of 4 cents. That level seems to be holding. If this is to get turned around, I think if you own the stock, you want to see buyers make a push off this level with some volume. And it doesn't necessarily even have to push against this resistance, but just push off, consolidate, because remember, all of these little half-cent marks, they represent a fair amount percentage-wise, right? And that's the other problem with these small penny stocks. So what you want to see is, the buyers try and push it off, and then if it consolidates, you want to see it put in a higher low than what it's showing now to show some sort of buy momentum, and then you would use that to sort of pivot off and re-challenge the 7 cent area again. Again, I have it marked 7.5 to 6.5, so I just 7 cents plus or minus, but that's kind of what you want to see. I did look through their financials a little bit. I kind of suspect they might need to raise some money. I see they did a raise not too long ago, and I also see that a former director has funded them to quite a degree through a bunch of convertible debt. But right now the price is not even at a level where you could do a financing. They would probably looking at a rollback if they're doing an equity financing. So, I mean, the company doesn't look like it's in great shape from a chart standpoint. Again, unless you're sort of a bottom fisher. I don't really follow the fundamentals of the company, so I don't know if they have any, pending news or catalysts that would be fundamental that could actually get this thing turned around. Obviously the people that hold it would know that better than I do, but it's got a lot of work to do to turn things around. Holding this 4-cent level, pushing up, and then getting some sort of higher low would definitely be a start.
Okay.
Absolutely, and
nothing against the company, nothing against the people that hold it. This is just what the chart's saying, right? You can see that even this push here, we didn't get above that 60% RSI level. The sellers are very clearly, the selling pressure is very clearly still here, and it's really just been a slow decay ever since this run. There's probably a bunch of people trapped at higher prices that are slowly capitulating.
Yeah, I think a lot of it has to do, again, like you said, with the Bridgemark connection over the last couple of months. I'm looking at a lot of the charts from these companies that were listed in the BC Securities Exchange when they were halting trading or issuing of these consultant shares for that time being. That's now escalated to the sense of we're hearing that the individuals involved, not the companies, the individuals involved in raising this money into these things, allegedly, I think some of their accounts have been frozen as of right now. So I think Prev is one of the ones, there is a lawsuit that they filed against the parties, and I think they're the first of those 11 companies to do so. So I think a lot of that still is connected to that, but it's nice to at least see some of these companies, if they're not involved in the actual scandal itself, like they didn't do this purposefully, I at least like to see certain companies coming out and speaking out against it, because I think if a company is silent on it, I don't know if that silence admits guilt, but it certainly doesn't admit that you think it wasn't you. So,
well, maybe we can get the company on and we can get an update.
Yeah.
Yeah, I saw that they had filed the lawsuit, and I mean, I think that's a smart move on behalf of shareholders, because obviously some damage was done when, if someone takes shares from the company and just liquidates them in the open market, that does serious damage. And not only does it blow money that the company had, but it's just all that, you have all that supply that comes into the market, and that can just wipe out all your demand, and it can take a long time to recover from that. Good on them for going after the people that they feel have done shareholders wrong, and if there's some money recovered, then at least that'll help the company. But
yeah, they just while we're on that topic, are they the only company that have filed something against that group?
To my knowledge, publicly, yes, they are.
Okay.
To my knowledge, I have not seen anything else.
That's a positive side. We'll get the company on. We've had them on before in the summertime.
Yeah, I'd love to have them back on and talk about it a little bit further. Absolutely.
Cool.
Thanks for that, Johnny.
One last point, maybe. Sorry, guys. Is just there is a director still financing the company. So if you want to try and find some things to have some positivity about, the director is still loaning the company money, and obviously if there was no hope in that person's mind, they wouldn't be doing that. So the fact that the director is still doing convertible debt to the company, at least that's one positive, I guess. But not much positive on the chart standpoint, that's for sure.
Okay.
No,
that's
Crop was number 2.
Crop's been talked about a lot lately as well.
Yeah, so they recently closed 2 financings. They're both done at 30 cents. It was an equity financing, I believe, that closed on the 5th, which would be here, and they closed a convertible debt financing, I believe that closed yesterday. That was also convertible at 30 cents. This chart has, if I zoom out just to a weekly view, I mean, it's just been a kind of the whole MO has just been a tightening pattern the entire time. So high, low, lower high here, higher low here, and things just coiling and tightening. You can see these Bollinger Bands on the weekly. This is the weekly chart getting very tight. So, I mean, that's the weekly chart. And then if we go back to the daily chart, we're very much seeing the same thing in recent history anyway. You know, high, low, lower high, higher low, lower high, higher low. Things getting very, very tight. The Bollinger Bands are squeezing, as they would say. You know, here's your Bollinger Bands here. You can see that over the, you know, the past while. This is as tight as they have been. So when you're looking to identify a Bollinger Band squeeze, you need to look back in the history of the company and see, you know, what defines tight on this particular company. And right now they're basically at a low for the last year. So that tells you, relatively speaking, the bands are tight on this company. Looks to me like they're, you know, you have some decent support. You know, between 30 cents and say 28.5, definitely some support tests that have held. On the opposite side, we seem to have a resistance band around say 40 cents, 41 to 39, say. That has acted as resistance in the past. It, you know, when the price did go above, it acted as support. So for whatever reason, you know, that level seems to be meaningful. You know, when I look back through some of their old financings, there was a big one done way back to sort of seed the company. That was done at 10 cents, and I think all those shares kind of washed out in this area. And then they did an acceleration on their warrants in June, I believe, and those were 20-cent warrants, and that would explain a lot of the selling pressure. I think the sellers had until like June 26th. They accelerated the expiry date, so there was some selling pressure there. There was also a private placement done, and my memory's failing me. It was done at 40 cents, and that became free trading in September. So there was probably some of the selling pressure we saw on this push up was some of that private placement. But I'm wondering if all of the paper that people wanted to get off hasn't been taken off, which could explain why we seem to run into some issues here at the 40-cent mark. And I also know that they did a warrant in. It is 120.
Okay, so
that'd be the all-time high, but let's.
Because you were bringing up financings, right? Remember on a past show we pulled that it was close to 4.7 million ad promo spend. Was that before that 52-week high was reached?
I can't remember that, Karl, specifically. Okay. I remember us talking about it on the show, but I can't remember what time period those financials were from.
Yeah, no worries. We'll get into it.
But just to note, so there was a financing, by the way, done on the company with some consultants. So I'm not going to call it a Bridgemark raise, but it's kind of the same thing that Bridgemark, was doing, where the company is issuing shares to consultants, and they would be under the consultant exemption, so they would be free trading immediately, and that was done in conjunction with the normal equity financing. But I'm not saying that the consultants that they brought on board are going to do what Bridgemark was accused of doing, but I just wanted to mention that. Another thing I did want to mention, they did do an early. Yeah, they did do an interesting thing. They accelerated their warrants. They had 40-cent warrants. They did an early sort of incentive exercise program in October. And essentially what that amounted to doing was almost like a raise at 40 cents. So again, anyone that exercised those warrants at 40 was able to get a replacement warrant at 50 cents. So it's almost like one of those things where if you can get your money off the table, exercise the warrants, just break even, you get an extra 2 years on your warrant, and the exercise price is 50 cents, and it brought some of the warrant prices that they had were quite a bit higher. I think they had 17 million warrants that they were aiming for, and I think about 5 million of those were exercised. So again, I would suspect that's a selling pressure at that 40 level. So anyway, just kind of so zooming in, tightening, very much a tightening range. Things are getting very tight. You can see we've actually set some, sort of broke out of this, the tightening range, because we were able to make a higher high yesterday than the previous high here, just by a little bit. I mean, it's only by half a cent, but it was happened. So you can see that there's some sort of bullish pressure here. I suspect you could have also, for example, drawn a trend line on this chart that connected these three peaks. I don't have it on here just to keep things clear, but if you can imagine a trend line sort of drawn on the chart. We did break this with some volume back in early February, but you can see that there was no follow through. And I suspect what happened here, this was the day before they announced the closing of the private placement. I suspect here that's where the, the institutional investor came in and said, oh, by the way, I'd like to participate. I'd like to do some convertible debt with you. And they might have been maybe some arbitrage selling in here. Whoever took down the convertible debentures was probably the one that potentially, caused this not to run, because you can see we did get a volume spike here on that day. You could have argued that, okay, it was breaking out from a, breaking that trend line with some volume, but we didn't get follow through. So very much like RSI, you can see bouncing between 40 and 60. So it sort of reflects this sideways motion with things very tight. I would expect if you get some buying pressure with volume behind it, this thing could run for sure. These are some of my favorite type of setups when it consolidates and runs sideways. The Bollinger Bands are nice and tight. If you get a push up, I think a push up above 36, for example, with good volume would be very bullish. The first target to beat would be this 40-cent resistance. And then, if you're able to beat that, then you're looking up at, possibly into the 50s. So it's definitely one to watch. I know a lot of traders' eyes are on it, and I'm not surprised by that, because it's coiled. It's ready to move one way or the other. But I would say right now it's got a bullish bias to it. And
yeah, absolutely.
These sideways moves, especially the ones that stay sideways for a long time, when they decide to move, they can really go.
Yeah, we just saw that on another stock as well yesterday, Agra, and they had a huge Bollinger Band squeeze. And I was telling Wes, our tech guy, and I was like, "Hey, look at this." He goes, "Oh yeah, that's Johnny Mac 101." He's looking, because that's one of your earlier videos of really going into a Bollinger Band squeeze in detail. So I love it. People are catching on.
Guys, I want to just let you both know that we're T-minus 7 minutes here till the end of the show, and also we both own Agra.
This is true. Disclosure, it's important. Oh, there's the camera. Hey.
Yeah, so just quickly, this is Agra, just so everyone knows what Brandon's talking about. If you missed it, look at how tight these Bollinger Bands got, the orange here, and then explosion of volume. This was your first indication. We got some beautiful follow through today, some profit taking, and that I'm not going to get into this. This wasn't on the list, but anyway, you can. This was a nice bullish breakout from a tight range. So I'll get to the third stock before I run out of time. CXXI was number 3. Covered it before. I think last time we covered it, I think we were down here, I believe. And so my comments before were, the major funding on this stock was done at $1. So I'd expected that area to act as support, which it had. I firmly believe that this stock probably was sold short in order to force better terms. I think that's what you saw here. And I know that, this does correspond with some of the ugliness we saw in December, but I suspect there might have been some price manipulation going on from people that wanted to force the company into better terms. The financing has closed. I think it closed in around late January, if my memory serves me right. So we can see that we pivoted this historical support area to, historical support area back to support. We're back above it. We got a test here and it held. And it has been a nice run ever since the financing closed. There's been some really good volume. This area here around $1.30, give or take, has been a resistance zone. Again, a previous support area pivoted to resistance because we were below. But look at this beautiful break that the stock got. What a push, like a huge increase in volume. Highest volume day since a long time, since basically early September. So when you see a stock it basically gapped up above support. So you had resistance. You had a resistance here, and not only did it break through, but it gapped up basically through that whole thing on really high volume. So that is a real sign of strength in my book. We are getting a little bit of profit taking. The volume has been good. It's making a second push. It has been able to make an even higher high, but you are starting to see some profit taking here. This candlestick here was maybe a little bit indecisive. There was pullback, but the buyers bought it. But the buyers pushed back, the sellers pushed back. But you can see sellers a little more dominant on the 25th of February last week. Or sorry, this week, I guess it would be Monday. So you are seeing some selling pressure come in, and that selling pressure is kind of happening in an area where you'd expect it. So corresponding with these peaks, somewhere between 180 and 165, we've had some resistance there before, and that's kind of looks like that area is acting as resistance again, as you would probably expect. So my feeling here, we might potentially have to consolidate a little bit more before we take another run at this. But I think from a broader picture, this gap up on huge volume above a resistance zone, that speaks a lot to me. I think that's a real sign of strength, and I think there's a pretty good chance that this stock actually breaks this resistance and eventually goes up, even if it has to take a little bit of a breather. If it does have to take a breather for whatever reason, it's still in a daily uptrend, but if it does, this area here around $1.30, you would definitely expect to be strong support, not just because it's an open gap, but because it's a prior resistance level, and you have the 200-day moving average sitting there. You have your rising 20-day moving average coming up into there would be all kinds of support here. So that that would look like a safe a buying level, I guess, if for whatever reason we would get consolidation back. But yeah, it's a strong one. Looks good. I mean, it's gotten well into overbought territory. And that is a sign of strength, ultimately. That overbought is just telling you this is a strong trend. It looks good for the people holding CXXI, I would say.
Nice,
thank you.
Well, that was a great TA session from Johnny Mac, as usual.
Yeah, absolutely. Now, we've got a few minutes. I don't know if we were able to, when I alluded to we might have one more thing coming up. Were we able to look at, was it the Dow or S&P 500 that's getting really close to the
venture? And we have 3 minutes to talk.
The venture is getting very close to a resistance level that could be quite key for people to tune into. I hope I'm not throwing you on the spot there, Johnny.
Just wanted everyone to be aware, if you're investing in the junior space in Canada, we are kind of getting close to what could be a potential resistance level, a key test. So we are in this downtrend. This is a daily chart. We had, right now we are making higher highs and higher lows, which is good, but we're coming up against this potential resistance that's around 630, and that actually corresponds to this falling trend line. Now, there's only 2 touches on this trend line, so it's not a valid trend line until we get at least a 3rd touch and a rejection off, but it is an area I am personally watching for potential rejection. I mean, because overall the venture, even though it's recovered well from the end of December, it is still in a downtrend overall long term. So breaking this would obviously be a good sign. Unfortunately, when you look at the seasonality of the venture, here's a seasonality chart. March is definitely not one of the strongest months. January and February on the venture, 80% and 60% of the time you are up. Your returns are positive. You can see over the last 10 years that only 22% of the time does the venture close March higher than it opened in March. So it doesn't tend to be one of the stronger months. So it has me watching for a potential consolidation here if we get back to the 630 level. So it's something to keep in mind for those of you investing in the junior space, that always good to know the direction of the overall market of the space that you are investing in. So just something to keep an eye on.
Yeah, absolutely. And I think that all the mining companies coming into Toronto for PDAC are hoping we can breach that.
Yeah, absolutely. And no, I appreciate it, because it's we preach it so much, whether we're in our chat rooms, whether we're talking on the show, whether it's just, we're just talking personally. If you're just looking at your stock, if you're just looking at your sector, you are not seeing the full picture. and you can get caught, because even the best company in the best sector can get caught by a terrible downturn of an overall market if interest rates get risen unexpectedly. Or there's a lot of stuff with Trump right now and Cohen and those different things. Is whether you love Trump or hate Trump, you have to understand these things will most likely affect markets, so at least pay attention to it. Macroeconomics, that's what I was going there, because you used that word, Johnny.
Well, Mr. Johnny Mac, thank you very much for another awesome segment. We will edit these clips, especially that last one, and get them out to their prospective groups and get it out to social media land. Huge value added.
Absolutely. Oh, you still there, Johnny?
Doesn't sound like it.
Oh, there we go. It's like, hey. No, thanks a lot, man. Always appreciate. And Karl, you're going to close off the show.
I'm closing it off?
You're going to close it off?
Well, you know what? I'm excited for next week as we're going into PDAC. Very, very busy. We got a lot of meetings set up this weekend. Johnny Mac, thank you very much. Thanks to all the people behind the show, from the producers to our own team. And we'll see you back next week.
Beautiful people.
Boom.
Oh, the camera missed.